Before we get into today's video, I just need to remind everyone I am not a financial advisor. You must of course do your own due diligence. Please see today's video as entertainment only. Yeah.
Coincidence.
Yeah.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not. What's the crack, everyone? Welcome back to Buy Wholesale. I hope you are all well. Yes, my hair is even looking worse than it has done. I took the scissors to it for Easter and I made an absolute Horlicks of it, just chopping away. And as you can see, it's every shape, guys. So you'll just have to bear with that. Like, it's shocking. Desperately need the hairdressers open. But anyway, that's aside for now. Today's video, I decided to look into more sustainable products. Again, everyone knows I'm a quantity surveyor, so it interests me in how buildings are procured, how they're sustained, the life cycle of buildings and costs of extensions, refurbs, all that kind of jazz. So building materials and products is of a very interest to me. It probably bores a lot of people, but within this sector, there is opportunity like anything. So I thought I'd start doing a lot of Googling. So I spent over the Easter break kind of looking into what products, what stocks, what companies are leading the way in terms of reducing the carbon footprint. I don't know if many people are aware that cement actually equates to about 6% of CO2 emissions a year. So I thought, well, let's see, there must be ways of being able to reduce cement, carbon emissions, and X, Y, and Z. And that led me to this company today that we're going to talk about, Heidelberg Cement. This is a German company now, so it gives us a wee bit of diversity in terms of the European place, which is what I like. But they're doing fantastic things. So today's video is going to be an introduction to the company itself, for those that don't know about it. We're going to look into potential entry points for this stock and what the long-term goals are. Yes, of course, I have my swing trades. Anybody that was on the follows me on Instagram would have seen my 5 times leverage trade yesterday on Tesla, which didn't quite go well for me. It was a bit sort of choppy, changey. I was hoping that it was going to throb all day. It didn't. It actually kind of just went down and then back up and then down. So didn't really work out too great for me yesterday on the 5 times leverage treat. But look, that's the kind of stuff you're seeing on the Instagram, so you might as well add me just to keep up to date with sort of the live trades that I'm doing. That's BHSDMV for that, guys. Make sure to get me on that. This is a long-term plan that I have of trying to find more sustainable products. It's as simple as that, and this is no different. So without further ado, let's get into today's video then. So Heidelberg Cement, ticker symbol HEI. I came across this company. Some of you may have heard of it, but they're actually the leading company for providing cement products, aggregate products, asphalt. European marketplace is huge for this product, and they're doing fantastic things within that space. But it's particularly what they're trying to do is be the leader in reducing the carbon footprint, which is remarkable because these are products that have been stable for a long time, and it's very hard to try and move away from that. And they're spending a lot of time in R&D and research and development to try and reduce their carbon footprint. So they're doing economically and environmentally fantastic things. So we're going to go onto their website now and have a look at it, but they're also doing something fascinating within 3D printing, and they're leading the way in terms of 3D printing buildings and using cement, which is just mind-blowing stuff. So look, I'll let this go on. This is going to be a bit of a presentation here, and we'll just have a listen to it.
We produce and sell building materials from concrete to cement to aggregates and asphalt. We are essential to progress. Our construction materials, services and solutions enable significant development worldwide. Sustainability has been an integral part of our strategy and will be at the center of our strategy going forward. We are determined to lead transformation and shape our industry in that direction. To get there, we need to break out of our silos, to unleash innovation, deepen partnerships with our stakeholders and communities, and push together for even better and greener solutions. Our clear goal is to offer carbon-neutral concrete by 2050. On our path to become a carbon-neutral company, our Sustainability Commitments 2030 define a key milestone and core principle of our corporate sustainability strategy over the next 10 years.
Since 1990, we have been reducing the CO2 footprint by 22%. This we have done globally by the use of alternative fuels, by increasing the energy efficiency, and by replacing clinker with low carbon products. That we are now using as a base for developing the new technologies and for pioneering new business solutions. In the past, the technologies and the science did not exist in order to mitigate all the CO2 emissions. Now we have the means in our hands. We have built a strong consortium of multiple cement companies. We added other industries, and we collaborate close with the R&D institutes and startup functions who really think out of the box.
After we finished quarrying, we had the opportunity to do land use change. This is quite a rare opportunity now in land management. Through the reclamation plans, we can develop new habitats.
Cement will be carbon neutral in concrete by 2050.
That's just a bit of a corporate overview then of videos that I found on YouTube. I've snipped it up to show you some of the key takeaways. 22% reduced so far. I love the fact that they're going and changing the landscape after they've mined out what they need. They're not just leaving it, they're actually going in and changing habitats for animals. I love all that, the guys. That's really, really, really good. I like that they've created a consortium, and also I love this guy's glasses here, guys. Sexy. That aside, really love all that they're doing. It gives you a warm fuzzy feeling and investing in a stock doing these things, so I'm excited. Let's have a look at the website. So this is their website, guys. First of all, this is a huge company. You can see they're all around the world, massive in India, America, Europe, obviously. So big, wide range of expertise coming in from all areas. The consortium that they're talking about, investing in all different companies, all new different research, thinking outside the box, as your man just said there. You know, they've got a good management board full of doctors and engineers and everything, guys. So if you go into this section, guys, you can actually get a brilliant breakdown of all the different things that they're doing, question and answers, what they're looking for, you know, what the next 10 years are going to be about. You go down here, they can talk about end-to-end experiences for customers. That looks all good as well. And then the alternative fuels, replacing natural resources. You could probably kind of imagine what that is. For example, when they mine, currently doing solar panels floating on water to be able to bring energy to anywhere they go, portable energy. I mean, it's really fascinating stuff. And being obviously interested in this sector as a quantity surveyor, it's quite groundbreaking, some of the stuff that they're doing, guys. I really think this website is slick. They talk about all their carbon footprint, what they're trying to do, the company, everything about it looks good, guys. On the website here, you can see carbon capture and storage with 400,000 tons of CO2 to be captured annually and transported for permanent storage. What they're trying to do by 2050. So again, guys, long hold. But I love the fact that a company is thinking about the next 30 years, you know. It's just mind-blowing. Like, and this is the kind of stock for me, thinking about long-term holds. And you can go in here and see more about what all this means, about how they're going to store it. You can see here they capture from the output, they bring it to transported by the ship, permanently stored, CO2 received and temporarily stored, export via pipeline offshore, and then it's stored in the seabed. So that's just a bit of an overview of what the company does at a very, very high level. If you just even Google Heidelberg Cement Group, you know, it comes up with plenty of information. Also, what I will say is they've got good social media presence as well, which is also key. As you know, I do like a bit of that. So give it a follow. If you go in here, you can see the different types of things that they're talking about. Global crack-free concrete market 2020, the regional outlook. The outlook is obviously good, guys. We're going through hopefully a period of infrastructure. Biden signed big deals. I know the UK is promoting big infrastructure, and within new buildings, infrastructure is going to be concrete, and I think with everyone moving towards carbon neutral, believe me when I say companies like this, in terms of you know, the awards that buildings go for, you know, it's all about trying to achieve excellence, BREEAM. This will be over most people's heads, but being in the sector, guys, these are key things that they're trying to achieve, and a company that's reducing the carbon footprint will all help that. So I definitely think these guys have an edge. The limestone market, though, I witnessed massive growth by 2028, so that's good, obviously, because that's part of the product that they produce. If you're enjoying what you're seeing here, guys, please like, please subscribe. Trying to grow this channel. We're at about 950 subscribers, doing really well. 50 to go to 1,000. If you can just hit that subscribe, you're really doing me great favors. And also, if you want to check out the links in the bio below, you'll see a link to free trade. Gives you diversity, guys. Have more than one broker. Always can't stress that enough. And if you use free trade, not only will you get free commission stocks, you'll also get a stock free up to £200. So what have you got to lose, guys? Click the link and find that out. Also, I'm sure you've heard of Reuters, the biggest financial news outlet in the world. Well, I've done a couple of articles with them, and if you go down again to the description, you'll see links to these articles. They've recently just issued their financials for that previous year, and they've absolutely smashed it. Now, being in the construction industry, we only really at the start of lockdown, sort of last April, Europe, sort of from March to April to May, that's sort of 2 months, there was lockdowns on sites, but after that, we've been back working full time. So you would expect them to have done well, especially in the recent times, because the construction industry was very much throbbing. Okay, so thanks to very good free cash flow, net debt was significantly reduced. In 2020, a clear premium on the cost of capital was earned. The dividend is set to increase by 5% to $2.20 per share, company with a pre-corona year 2018. And that is the next key thing, guys. They've got a dividend which is increasing. I love to have a good stock that looks like it's going to grow, plus there's a bit of a dividend play. So it's a nice, solid, stable company. So the group revenue decreased by 6.6% based on the previous year on a like-for-like basis. The decline mounted to 4.6%, so not as bad. The 601 million decrease in HEI Trading's revenue due to the decision to significantly reduce fuel trading with third-party customers contributed significantly to this decline. So again, that's because of what they're trying to do with their carbon footprint. The result from current operations before depreciation increased 3.5% to 307.07 million. Previous year's 3,580 on a like-for-like basis. The increase amounted to 6.1 compared to the previous year. In addition, successful price increases on lower energy costs, again something that they're working on. Significant savings from the COPE, which we'll talk about in a minute. Action plan launched in February 2020 has particularly positive impact on the result. From current operations rose 8.1% to 2,363 million. The previous year was 2,186 on a like-for-like basis. This increase amounts to 11%. So there's where your money is. That is huge. And there's more there that to talk about, but that's just the key massive things I want to talk about. We'll actually just watch a video now of the director just talking about this.
What were the main reasons for this strong performance?
I think first of all, we addressed the COPE program very early on, which basically saved us 1.3 billion cash, so more than we originally thought. And secondly, I think price increases went also well. We pushed for price increases wherever necessary and possible. So that's something to be proud of.
Good. So how have you started into the year, and what are your expectations for the full year 2021?
If I look at the results for the first 2 months, I think we should be satisfied. Start was good into 2021. And personally, I'm quite optimistic. I think there are a lot of infrastructure programs coming. Australia, Italy, the Green Deal in Europe in general, the UK now pushing. North America, you heard about the 1.9 trillion program that Biden has kicked off. I think that's something that will obviously help us.
Just to look at the charts then, you can see today that they're up 0.75%. The average volume is roughly around 720,000. Currently it's at 300,000, so there's a wee bit below. You can see the 52-week range is anywhere between 37.96 to 78.96. We're slightly below that, but we're at pretty much not the yearly highs. Is what I'll say. Good market cap, you'll get the dividend. The dividend date's going to be coming up here, sort of thing. So you could use that as your entry point. You can see the year to date, guys. It's went up, it's went up, it's went up. It's smashed earnings, so it continued to throb. Happy days. If you just pull out the full max chart, though, I want to show this. You can see here, up and down, up and down. And the reason it goes up and down, guys, is because this is based on the construction industry. If the construction industry is on its knees, companies like this aren't going to go well. So let's just have a look at it. The last time I had a big throw up, 2007. What happened in 2008, guys? We all know everything went financial crash, and then it went down, and then obviously the crash tanked it, and then it's starting to build back up again. So we're sort of sitting around 7.5. Previous highs, all-time highs, were in and around 108. And you can see that means there's roughly about a 60% upside. Now, that's going back 13, 14 years ago now. Bear that in mind. That's the video, guys. Just to do a bit of a wrap-up summary then, we've got big target dates of 2030 to reduce the carbon footprint, and obviously that fits in with the whole sort of general global feel of being able to reduce the carbon footprint. So that is key. 2050 is what they're aiming to be carbon zero, which is a big massive ask, considering that cement and these types of products are staples in the full construction industry. It will be groundbreaking to achieve that, so that's very exciting and a long-term target, which I like. They've done 22% already reduction, so they're showing progress. They've got a good dividend, and they've increased that dividend, and the dividend date's coming up on the 6th of May, something to be interested in. Now, you've looked at the chart, we see that it goes in waves. Biden has signed his big trillion or 1.6 trillion deal that was talked about there. So what's that going to mean? Plenty of infrastructure. We've all these EV charge points, we've new roads, we've got all this stuff that's in the pipeline that I see the construction industry for the next 10 years being solid as a rock, if you excuse the pun. Solid as a rock. So what that means is So you're getting a good, solid European play dividend stock that will give you diversity. So for me, I'm going to be buying into these guys. I'm going to average my position because it is at a recent all-time high. So phase the money in, see where it goes. Obviously on the dividend, ex-dividend date, it tends to fall, so you could do it two ways. Do you want to get in now, get the dividend, or would you prefer to get in at maybe a lower price and run the risk of potentially losing out on any runs now? Me, I'm going to split the difference. I'm going to phase a bit of money in over the next week or so, and then I'm going to wait till the dividend, collect my dividend, and then buy top up for the year ahead. That's my plans, guys. I'd love to hear your thoughts. If you found this video informative, please like, please subscribe, grow on the channel, all that jazz. Any other environmental, sustainable sort of stocks, anything that you think would be worthwhile letting me know about, I'd be love to hear. I'm really loving this space we're trying to create this channel is about, and give you that warm fuzzy feeling inside. Don't forget, get me on the Instagram, click the link. The Twitter vote's now live. You can also get that, guys, on the Twitter page for next week's video vote. Yeah.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not.